On today's show, we bring in Ivan Raskakov of Intellium and Giuseppe Graziano of GGRG Brokerage. We discuss their Q3 market report on liquid domain names, particularly 2, 3, 4, 5 letter.coms and character.coms. Some changes to the report and some very interesting insights about China. Enjoy the show. First, serious about online trading? Secure your funds, keep your merchandise safe, and use a company that keeps the buyer and seller protected the whole way through. That's escrow.com. Payments you can trust.
FD was built by domain investors to increase your inquiries, sales, and profit. Forget spreadsheets and archived emails. Manage your entire investment portfolio in one place using a secure and completely confidential platform. Learn more at ft.com. That's EFTY, ft.com.
Hey, Sherpa Network. Thanks for joining us. We have Ivan Raskakov, part of the Intellium team. Hi, Ivan. How are you?
I'm well. How are you, Jess?
Great, thanks. How are things going? You know, Intellium runs both Esterbot and Domain IQ. How are things going over there?
Well, things are quite busy. Obviously, you know, we have a number of other services we run, so there's always a lot of work. We launched a new tool for Esterbot customers, domain leads. I don't want to take too much time talking about that because that's not really why we're here. But things are busy and things are going well.
Good to hear. And Giuseppe Graziano, hello, Giuseppe, a broker from ggrg.com. How are you today?
I'm good, Tess. How are you?
I'm great, thanks. Ivan and I are drinking coffee over in the U.S. and you, it's not coffee time for you, is it?
Just water.
Sure. Okay, we believe you. So we're
Also
here.
my coffee.
Yeah, sure. So we're here to discuss LXDO.com has issued your 13th edition of the Liquid Domains Overview. 13th edition, we really have quite a bit that you've built over time here. And I even put a number on it, 614,928 .com domains that you describe as liquid. What are those domains? That's a very specific number.
Yeah, it's a very specific number. So what we consider liquid, it's about 9 categories of domain names, which are the ones that are most commonly traded. And we call them liquid because they're all registered, so you cannot find anything available for registration anymore. And you can always sell that within like a short period of time for at least a floor price. And these 9 categories are the trueletter.com, the freeletter.com, 4letters.com. Then we have the 2 number, 3 number, 4 number, and 5 numbers. And then we have the hybrid combination of 2 characters and 3 characters. For example, 2 characters are like 5G.com. So these comprise, this whole number, it's about 614,000. So yeah, that's where the liquid domains comes from.
Excellent. Okay. Thank you for clarifying that. And you've made a change. Instead of issuing a PDF, I absolutely love that you made it searchable on your website, much easier to sort. And so when I go here to lxdo.com, I can just click on, say, 4Ns if I want to see 4number.com domains and what's going on there. You can even see your historical public sales, historical escrow sales, all sorts of historical information. This what caused you to make this change? This is fabulous.
Yeah, it's much better, isn't it? Yeah, no, it's just because we were debating with Ivan that nowadays a lot of the traffic is mobile, so nobody really has the time anymore, to go on a website, then download a PDF, and on a very tiny screen just scroll through the data and just enlarge the picture just to see what are the numbers of the report. So we just wanted to make it a lot more easier, in terms of interface, a lot easier to access for users, and also with that we're also able to put certain figures, like for example, the differences in, if the 5 percentile is growing or not, they can actually check it directly on the website, while before that to compare different editions. And I think that it's very important for the users.
That is important. Very nice. So, I just had Jackson Ellsgood on the show from escrow.com discussing the escrow's domain investment index. And I really want our Sherpa network to understand the difference between the value that your report brings and the value that brings. And I think especially for investors to look at both to get a full picture of the market. So you take public sales, and do you integrate escrows? So escrow takes private sales and they put together that data and share it in a way that doesn't reveal anything private. I don't know how to say that better. Can you
it was a pretty good.
Okay, thanks. Can you explain where your data is coming from?
Yeah, sure.
So
go Ivan.
So I wanted to kind of first point out that in the domain industry, it's very important to look at multiple pieces of information because transactions are extremely fragmented. Obviously, escrow has access to its own data. It can see what sales transpire in these categories that use escrow as a payment system. But one of the things that we noticed, like for example, if we look at 5N sales, we noticed that escrow.com sales in the third quarter were significantly lower than public disclosed sales. And so it's very important to have as much of a complete picture in this industry as possible because things don't really get reported to a single central place. And the more information you can look and compare, kind of the better it becomes, the more information you're armed with.
Thank you. Yeah, that makes sense. So let's take us through the report, and then we have a couple questions for you. But let's just kind of go through it. See what's going on in this category of these liquid domain sales these days. You want to start?
Ivan, you want to go for it?
Okay. Oh, sure. So sorry about that. The first thing we noticed, obviously, we do have an uptick kind of in sales. I think liquid domain sales were roughly close to $14.6 million in the third quarter. There was a significant part of that was 4L. It doesn't seem to be unusual for this time of year. For example, if we look at last year, there was also a significant uptick in the third quarter of 2018 in terms of public sales. The interesting difference, about a year ago, the bulk of those sales came, I believe, in 3Ls as opposed to 4Ls this time. So it's an interesting observation because does this mean that perhaps 3Ls are closely held by investors, that they're being developed? So are we going to see less transaction in those domains? And that's why we're starting to see kind of activity getting pushed out into things like 4L. So that's one interesting point. The other thing I've noticed right away, and interestingly, is the difference between public sales and private sale. Private sales shown by escrow, especially in 5Ns. I think we had something like 1.2 or 1.3 million public sales, but only a little over 100,000 reported by escrow. And the question I have, of course, and we all probably do, it's a category dominated by Chinese registrants. Are they moving to use perhaps other payment methods or payment systems in place that are perhaps a little less known to us? And how do we capture that sort of traffic, and how do we make sure that activity is measured? And the other last thing is I'm always curious to see how changes in Bitcoin pricing and kind of that other digital assets affect domain names. Giuseppe can attest that when we saw significant price appreciation in crypto in 2018, and then the subsequent collapse, we did see liquidation of domain portfolios later on in the months to follow, which affected other things like price and things like that. So it'll be interesting to see if that follows, given Bitcoin hit about 12,000, I believe, one coin per 12,000 US dollars, and sort of retreated downward 30%. So kind of these really broad kind of strokes, if you will, that we noticed overall and would like to keep track of in these liquid domains.
Very, very interesting. Giuseppe, you want to pick it up from here?
Yeah, sure. Which direction you want to take it?
I'm just looking at this report for the first time. I apologize. But I did have some questions about China. Do you want to jump over to that right now, or you want to finish going through the report first?
Yeah, no, sure. I mean, I think one of the biggest changes lately in China was that, Xi Jinping, which is basically the premier, he actually said that, blockchain, it's something that China really wants to leverage. And I think this will be very, very interesting to see how this develops. After that, there was a short spike in price for Bitcoins. Now I think it's pretty stable. But it's very interesting to see, like Ivan said, what's going to happen when, say Bitcoin prices go up or down. Because I personally know a lot of investors there are domain investors who actually invested in Bitcoins. So that definitely affects the level of supply and demand in the market.
Okay. And what about China's new policy on Bitcoin? Do you think that's affecting domain names sales velocity or volume at all, especially in the liquid domains?
I mean, the thing of liquid domains is that, a lot of, just because of the words, a lot of people use them for liquidity. So definitely if somebody wants to invest in something that's liquid, I mean, you always need to take, to consider that Bitcoins are also an alternative investment, which is also liquid. So definitely if a specific investor allocate parts of his portfolio towards Bitcoins, might not allocate towards domain names. So definitely will have an impact. Now, as much as we can measure that, we don't really know until we see it. We normally see afterwards what happens with the sales of domain names.
Okay, all right.
So and I do want to, apologies, but I do want to add something, an important distinction. I do want to separate blockchain from crypto assets in the sense that blockchain is a technology, and of course, China has publicly stated that it's going to try to make significant investment in the technology, but that may not necessarily translate into cryptocurrencies in the long run. In fact, I think just a day ago they've banned Bitfinex and something else from certain exchanges and certain chat rooms, basically limiting their transaction. Because I think part of the problem, of course, for any government, not just China, but also US, is understanding capital outflows, understanding what should be taxed, if you will. And as such, favorable policy towards blockchain may translate in the short run as price appreciation, because you can always say, well, blockchain is the same as Bitcoin, but it's a little bit different here. So I do want to make that distinction.
That's a good distinction. Slightly off topic, what podcasts or websites do you go to for your information on blockchain and Bitcoin, but in China, or the economy in China? What do you think are the best resources for that?
I mean, this is a very broad question. I mean, there's a lot of podcasts and information about the economics, and there's very different resources. I personally like a lot The Economist, so I read out that. Also, I think they have an excellent podcast. But then again, I think it's important to get information from different perspective. So there's several blogs which actually are quite interesting, and they offer their perspective, but mostly, The Economist is where I look at information.
Okay.
What about you, Ivan?
Well, I look at Bloomberg quite a bit, obviously, because they have a tremendous wealth of information that have stored and organized over a long period of time. But also, I supplement it with a couple of blogs, smaller blogs. Some of them, have opposing political bends, if you will. Part of the difficulty in really looking at China is kind of understanding how it's seen on the inside versus the outside, and trying to balance all those different perspectives to try to figure out where the actual or at least semblance of truth may lie. And you need opposing points for that, obviously. I also look at Twitter, actually. I use Twitter as a tremendous aggregator of information and research. The finance Twitter community is extremely, extremely sharp. There's a lot of links for research papers, a lot of links for independent research that that are exchanged there along with ideas. And for general economy, behavioraleconomics.com, I believe. It's a blog run by Mark Dow, who's a former IMF economist. I believe he worked with the World Bank as well, but he runs a number of funds. He's a really sharp guy. So I try to balance all these different things, but Twitter becomes this aggregator of information for me, basically.
Very interesting. All right. I'm over looking at your Twitter profile. I want to see who you follow. Just click.
I don't know. I make a lot of jokes there, though, so I don't know how truly informational my Twitter feed will be, but I do retweet research and things like that. So there's some interesting people I do follow that I would recommend for sure.
Okay, that's a really good point, especially from somewhere like China, that Twitter does have a unique access that other places may not. Very cool. All right, I really want to look at three-letter.coms. We've seen a lot going on in this last quarter, Q3, since your last report. I know over at Media Options, we've had quite a few sales of three-letter.coms, but at the wholesale or liquid level, we're seeing continually declining prices, and I'm wondering if you're seeing the same, because we're seeing this gap too, and it's growing. The gap between the liquid market and the end user market is, of course, growing. That supply is ever getting smaller. Are you seeing the same here?
Yeah, I mean, so as Ivan pointed out before, last quarter was very different. I mean, the same quarter of the last year, so there was a lot more sales, and especially because there was like a big portfolio that was sold from China. And the best part of the portfolio got bought pretty much right away. So that amounted for like a lot of sales for three-letters. But then, as correctly you said, so the floor prices of three-letter.coms is slowly like going down. And I think the reason is because a lot more investors are becoming more interested in domains like oneword.com, for example. And this is because it's purely because of margins. So if you buy, let's say, three-letter.com, it's a very codified market. So you pretty much know that if it's a Chinese premium three-letter versus a Western premium three-letter versus a non-premium three-letter has specific price ranges, which are very, very codified. And it's very easy for people to understand how much you can pay, you can sell these domains for. While for oneword.com, there's more of an asymmetry of information and more like a different perception about how much these domains are worth. So for example, if I buy a domain like liquid.com, liquid.com is not a good example because it was sold for a lot of money, but let's say lamp.com. So for some investors, it might be like a 6-digit name, but for some other, it might be like a low 4-digit name. And because of that can create like a big disparity in information. And we can buy a domain for very cheap and resell it very quickly for a much higher price to another investor, which is basically, in other words, the market is much more inefficient. And because of that, there's more opportunities for investors.
Okay, so I'm looking here at the 3L section of your Q3 report, and I see you're showing the median prices going up about 11% to $27,388 per three-letter.com. The turnover, to me, that's more or less stagnant. Well, it's 20%, but 0.09%. Is that pretty? That looks 20%. I don't know. What do you think of that? Is that significant to you or no?
Well, I think it's.
Yeah, go for it.
Sorry about that. Well, I think, again, if you're dealing with a large increase but in a really small number, you do kind of have to question that, unless the inventory is really, really tiny, right? But here you have a decent amount of inventory, so I think that's fairly stable, I would argue. And Giuseppe, what do you think about that?
Yeah, I would say it's fairly stable. I mean, if we look like at the data quarter on quarter, it's like there's no big difference. Then again, the disclosed sale is really what makes like a big difference. Like if you look at the escrow numbers, then we're looking at like about 3 million, 3.1. and last quarter was 3.5. So overall, like, if we look at the escrow.com data, it's pretty much stable.
Yeah.
So yeah, I will not see that there is like a huge difference in that.
Okay. Yeah. I mean, we're looking at 16 public sales, but it's still, $793,000. I think this in particular is why it's so important to have these reports, because with the volume isn't the same as, say, stock market or something, but I think the fluctuations are very important and very steady and reliable. So with oneword.coms, do you ever pull out in your list what in your 3-letter, 4 letters are actually, dictionary words or not? And do you ever plan to, or no? Because the liquidity is different?
Yeah, I mean, we can both Ivan and I can go. I would say it's actually quite challenging to pull out what is the actual keyword domains that are sold within like the liquid domains. I mean, you can do that in public sales, but then again, it's a data that would greatly change if even one or a couple of transactions are private or not. While on the other hand, for the escrow.com data, of course, we can't have that information. So I think it would be like a bit challenging to get it out. And even if we were able to pull that out from the public sales, I don't think it would be like statistically significant.
Okay, no, that's all right. I mean, so we're seeing in the one word space kind of wholesale prices growing almost faster than retail prices, with margins getting a little squeezed. So I was wondering if you had any data in there, but I know that all the same, you're an expert in this space. Giuseppe, what do you attribute that to?
The going up of the oneword.com?
Well, yeah, the wholesale prices going up, and the retail prices, of course, are also going up, but not as fast. So that, margin is getting a little squeezed.
Mm-hmm. But I mean, like, putting like in front that, I focus on the liquid domain space. I would attribute to like an increase in demand, because there's a lot of investors, a lot of people I talk to, and they were like very interested in the liquid domain market before, and now they're a lot more interested in oneword.com. Again, because there is much bigger margins for them to make. So it's very easy to get a decent oneword.com for like 10K, and then resell it the day after for 15 or 20K. Okay. But for doing that for freelancer.coms, now it's very quite challenging, because everybody knows what is like. And actually, I think I would like to believe it's also thanks to a report that there's a much better perception about what these prices should be and what a domain should sell for.
Yeah, I agree with that. Absolutely. Ivan, let's look at the 5number.com domains. What's going on over in this market? We're seeing the median price drop to about $500 for the domains, but we're seeing $1.2 million in public sales volume. What's going on over in this space? What are you seeing?
Well, I think as I sort of hinted at it, I think this is a category of domains that's really dominated by Chinese registrants, and it's difficult for us to really see how big of portfolio chunks are being exchanged. But generally speaking, this type of behavior is very similar to trades of large portfolios, right? And when you trade large portfolios, you sort of have a certain fixed price per domain you may charge. It may lower kind of certain medians that you see. So that could be very much the case. And if we look at the development data, in fact, if you looked at that slide, we sort of have a kind of dual number, if you will, of 3.4 or 5.8%, which seems kind of like an outlier. And the reason for that is there's a very, very substantial amount of Chinese language content on the 5n.coms. And it becomes very difficult to draw at times a line of whether those sites have any sort of developed value, or do they have actual content value, or these are just regular parking or resale pages. So that's kind of what we see happen in that particular space.
Okay. Do you think, I mean, it has such a small percentage developed, right? Like 3.4 to 5.8% is developed. Do you think that's still a good place to invest as a non-Chinese domain investor?
I'm a little leery of recommending investing into a category where the individual may not really understand. I think too many people look at price action and think, well, I'm going to double my money tomorrow. and then end up sort of with nothing instead. Not suggesting, obviously, that events would drop to zero or anything like that. Obviously, they have standalone value, but I'd be very cautious of investing in the market dominated by consumers that, unless you truly understand them, unless you've kind of transacted or kept track of Chinese markets, to really kind of think twice before doing that.
Okay, good to know. And then in the twonumber.com domains, Giuseppe, this question's for you. So there are no public sales. And how frequent is it that in a quarter there are no, I mean, there's only 100 twonumber.com domains, 12% are developed. China is invested in at least 39% of them. What's going on over there? Is this common to see?
Yeah, I mean, like, as you said, there's only 100 domains. A lot of them, the percentage of development of twonumber.com is very high, and they very rarely come on the market. So you really rarely see when one of them sells. And even when they sell, they always, transaction, it's almost always private. So you don't get any data disclosed. Because of that, it's very difficult to make any inference because, you don't have enough data. Most of the transactions are private. So there's not much you can see unless you read like behind the scenes and like you're actually brokering those transactions.
Okay, yeah. And I have no idea about this, but I'm even assuming for escrow that would be difficult for them to even put in their report, because if there's only one transaction, they couldn't include it because it wouldn't really be that private.
Yeah, absolutely. So actually, even I would say, like, even if there's like one transaction, I think for privacy, like escrow does not report them, just like to make sure that they keep the privacy of the users.
So that's really difficult. So if I mean, I imagine most investors watching this aren't looking to acquire a twonumber.com because that is a very difficult acquisition. But if an investor were trying to, where would they even begin?
I would say that you have to kind of look at what's actually developed. I mean, part of the reason why, for example, these domains aren't available is because a lot of them are actually in use. I mean, obviously, maybe not as much as a 2L, but you still have 12%, I think, development rate for these domains. So you start looking at what's maybe parked, what's not being used commercially, kind of analyze who is data. So I think that would be a good start to see where or what is happening there, and keep track of DNS changes, things like that. I mean, just your standard kind of research.
Okay, thanks. I am not really a finance person. And I'm looking at your summary for this, for these, past reports. And I see 2018 Q3 was, three-letter.coms were the most traded category with over 11 million in escrow sales, but it was one of the worst quarters for fifth percentile values. What are fifth percentile values? I'm sorry, what is that referencing?
Ivan, you wanna go?
Well, I think we define them as kind of the floor. We try to set what is a reasonable floor for a specific category of domain based on kind of sales data, if you will. I think that's the best way I would summarize it.
Okay, and so how does that from 2018 Q3 compare to 2019 Q3?
I think we have seen some price recovery from what I recall. Giuseppe, would you agree with that?
Yeah, I'm just checking the graphs with the summaries. I just want to see like where
Okay. And while you're looking, I will say, I know over at Media Options, we had a very, very strong Q1, a pretty regular Q2. Mm-hmm. Q4 is looking very strong as well, but our Q3 was really, really not that great. Very unexpected. I mean, I don't know for Andrew or someone,
right.
but very different, I guess is what I want to say, more than unexpected. It doesn't seem like this report really is mirroring that. What?
Well, I think, and kind of we come back to the point where a lot of sales data and a lot of transactions are really fragmented. So, for example, someone like Andrew may have had a slow third quarter and a great second quarter, but if you look at overall second quarter, maybe Andrew could have had the best quarter out of everybody, kind of in terms of his transactions, because sales elsewhere or from other brokers or other markets may have been slow for various factors like holidays in certain countries, things like that. And so, I always, my dream for this industry is always being able to centralize and aggregate information. For example, when you want to buy oil futures, you can buy them anywhere in the world, basically using various exchanges. With domains, sometimes transactions aren't reported, markets are fragmented. Andrew may have a great quarter or a bad quarter, and somebody else is completely different. And there's no way to truly compare the two. This is why publishing as many of these reports and really kind of looking at all these data points is so important, because sometimes it gives you an interesting perspective of what actually happened versus what perhaps your individual business may have done.
That's true. And the two of you really have made that dream, Ivan, come quite a bit to fruition. I mean, as far as I know, you developed the first report really ever out there, and you've been so consistent in building that over time. I would love to hear your plans for the future. Where is this dream going? But first, Giuseppe, did you get to look that up?
Yeah, actually, I was looking at the data. So basically, I'm looking at Q3 2018, and so the 50th percentile then it was 14,000, and right now it's down to 11.1, which means that the prices actually went down quite a bit and quite consistently as well. So yeah, that is a big difference, because it means that if you own freeletter.coms, then the value went down quite a bit, maybe by 30%. The other number, which is really incredible to see compared to now, is the escrow.com sales volume, because that for freeletter it was actually 11 million, and right now for this quarter it's a lot less. Yep. Let me see. It's about 3 million. So there's a huge differences in in the amount of sale. So yeah, maybe Andrew is not alone in the past quarter.
And do you think something in particular is driving that? Does that cause concern to you, or do you think that's a typical fluctuation?
I would say maybe it's a stale inventory, because a lot these liquid domains, they don't trade so much, especially the most developed categories. And I remember 1 year ago, it was Q3 2018, there was a huge portfolio that came up for sale. So a lot of people were buying these assets, and over time there's no new domains that come up for sale. So there's not enough supply and demand to get the market going, I would say. So I would probably attribute that, to this.
Okay, all right, good to hear.
I'm also, and sorry, I don't mean to jump in, but I'm also interested in exactly who is acquiring. I know, for example, James Booth just said he bought PDA.com. He's a pretty savvy investor and broker, so I'm pretty sure he didn't pay end user value for it, if I had to guess. But again, we don't know what he may have acquired it for. But also, I know that folks like Brent Oxley and some other guys were really out there buying up names at favorable, or at their perceived favorable valuation. So I'm sort of curious, and we won't have an answer to this. Again, we don't have access to escrow data, obviously, but I'm curious whether the type of buyer has also changed from last year, let's say, to this year, because that would have an effect. If you have brokers and investors that will want to flip these names for a much higher price down the road, then you may have a temporary kind of decline on price, but it may, let's say, come up down the road when they resell these names.
Okay. And do you think the type of buyer, how is that changing?
Well, would be a little speculative, but if we're seeing kind of lower sales volumes and declining price, you guess one of two things. Either folks have to liquidate inventory, whatever they have, in order to raise money, and that ties into Bitcoin, because if you borrowed money to invest in crypto and it went down 30% last quarter, you have to pay it back. So we've seen similar behavior in 2018. Or the second part is you have a lot of wholesaler and investor activity where they may buy these names kind of on what they perceive favorable prices and maybe flip them down the road. So I think we'll take a look to see if the development number changes. But I think that may be helpful to see if these names are actually being developed or not. And if they're not, maybe we'll see them back in the market at some point.
Okay. All right. Good to know. Did either of the two of you buy any liquid domains this quarter?
Well, we cannot invest in domain names. I mean, we run Estibot and Domain IQ. I mean, we would be competing against all of our customers, hundreds of brokers and other folks. So that would be extremely unethical for us to do. So we are not allowed and do not invest in domains actually because of that.
Yes. Yeah, no, same here. Like we don't invest in liquid domain names. Yeah, we just have like a few hundred domains, but just for like, development purposes, but that's it. But no, we didn't invest in liquid domains.
Okay. All right. Good to know. Thank you for covering. I knew, Ivan, your answer, but I didn't know yours, Giuseppe.
Sure. And I completely get it. I mean, it's sort of the same question. Well, do you subscribe to the kind of the product in the sense but this is a little bit different because of the conflicts of interest. And it's just, it wouldn't make sense. I mean, everybody comes to us and they give us kind of their private information, their kind of business plans, their plan transactions. And for us to see all that and then turn around and invest behind their back, it was just not be right. So.
No, I think this is a tremendous gift to the industry, and the fact that it affects your investment and you do it anyway, I think is really speaks volumes to what you bring to the industry and what you're willing to do for it. So tell me this, what are your thoughts on this report? And Ivan, you mentioned, your big dreams for aggregation of data and less fragmentation. Is there anything in the works to make any larger scale changes?
Well, we always discuss ways to make things better, of course. And part of it also depends on the response that we get, because obviously Intellium has access to a lot of data. We make some of it public, some of it never sees the light of day, and sort of all of that really depends on what the industry wants to see. It's been an interesting question because obviously people focus on sales. When you own an inventory, you need to sell, you need to know what's selling, where it's selling. So you will absolutely be laser focused on that part. But there are other small things like changes in DNS registers, how things move around that are, I would say, important to keep track of as well. But yeah, we're always discussing ways to make things better. But I think there are things we'd like to see in the industry, or at least on my, I won't speak for Giuseppe, but on my end, I'd like to see things in place that will allow for more commoditization of domain names. So before we get there, I think it's a little early for me to talk about future plans.
Fair enough.
Yeah, same. And I agree. Just like to add to that, I think that's one of the key components, like to make the industry grow. It's just to get to a stage where a lot of people like agree on what should be like the fair value of a domain. So everything that goes in that direction, it's always positive. And Ivan and the guys in Intellium, they're really working towards that, and that's what we're trying to do with this report as well. So we really hope to bring more of this if possible.
Makes sense. Giuseppe, is there anything about the report that I haven't asked that you think is important to discuss or highlight?
That's a surprise question. I will need to look at it. I don't know. Let me think about it. In the meantime, I'll just pass to Ivan.
That's okay.
Yeah, no, I think it'll be interesting to see, and this is why we've tried to be as consistent as possible and publish as many of these reports as possible. It's important to go back in time and kind of see how things change. And sometimes it'll be because we may not have had complete data, but sometimes you detect interesting trends. I want to pay attention to the trend where the sales data and public sales exceeds what escrow reports, because again, we live in a difficult era of trade wars and some level of deglobalization and a little bit of kind of nationalistic passion across the world. And so it becomes interesting just how, I wouldn't say disenfranchised with globalization, but whether things are separating. So whether or not there may be other exchanges or payment systems or transactions in place that we may not be aware of, that may make this a much bigger industry or maybe a little smaller industry than we think. So keeping track of those kind of historic changes, there's some gold there, I think.
Okay, good to hear.
Yeah. I think also like another important things to notice is that, so for the lower tier of liquid domains, so we're looking at 5 numbers or 4 letters or 3 characters, so all the domains that have a floor price which is lower than, let's say, $1,000, a lot of those domains actually are auctioned. So if domains go through auction systems, they might not go necessarily through escrow.com. So that's why you would see a lot of you see like the public sales volume is actually higher than the escrow.com sales. So that it's an explanation, something that people can look at.
Okay, good to
While
hear.
like the higher tier, like I said, like a 2 letter or 3 letters, they always go through escrow.com because the higher value transactions, and they're normally not auctioned as often. It's mostly like private transactions.
So what I hear is read these reports, listen to DomainSherpa, and go to a conference. And if you can, get in and have a conversation with with brokers and people like brokers like you, Giuseppe, and people like you, Ivan, who have access to more information. And of course, ethically, you don't share specifics, but you do have those more inner workings. This is, I think, tremendous for every investor who wants to know what's going on. Before we close, tell me what's new. I know Intellium has some fabulous projects, and I'm sure over at GGRG, Giuseppe, you have some new domains under brokerage or some new projects in place. So Ivan, let's start with you. What's new in your world?
My boy, just running all kinds of updates. I mean, the one absolute new service we launched, it's really for asked about customers, is domainleads.com. And so the reason we launched it is we noticed increasingly, we have a very broad scope of business, and increasingly we're sort of moving away from domain investors at times. And we really wanted to refocus a little bit on that. And Luke is extremely passionate about the domain industry and just kind of allowing people to make a living and have kind of a great life, great free life, if you will. It doesn't involve necessarily going into an office. And so we launched that service. It leverages our crawl data. So we crawl the internet very regularly, trying to figure out what's developed, collect all kinds of information. And so domain leads allows you to search based on keywords and pull up what developed websites may be using those keywords. For example, ice cream businesses or whatever business that may be interested in your domain. And so that's completely free to ask about customers. We're not charging any data, any funds for that additional toolkit. And then we're always making updates to NamePulse. We're always running a lot of custom solutions, things like that. So I've been quite busy. Nothing I can really talk about yet in more detail, but there'll be more stuff probably in a year. If we talk in a year, there'll be more things to highlight as usual.
Okay, I'm going to hold you to it. Q3 2020, it's on. And will we see you in Austin at NamesCon?
Most likely. I never say 100% because, again, we have a very small team, and if something kind of goes wrong, we all have to be there, kind of making sure things work. But probably, I would say. I mean, we've gone for the past few years, definitely, and as long as I've been around, I think. So you're likely to see me there.
Good. Okay. And how about you, Giuseppe? What's going on in your world?
Yeah, so one of the latest development that we did is, we have our private brokerage platform called LXMe. So people who invest often in 3 letters or 4 numbers, all kinds of liquid domains, we have a platform for that. And we recently opened also for 2letter.com and 2numbers.com and 3number.com. So this is like very recent. And just to continue on that route, then we also brokering 2number.com, as you were asking before, where do I find 2 numbers? So we're brokering 25.com. So yeah, that's pretty much what's going on in our world.
Okay, 25.com. That's a big deal.
Yeah.
And this is what is the website that you just mentioned? LXME.com?
Yeah, lxme.com. So it's a private platform. So we really want to be careful, like just to get investors who actually are, I actually invest in this sort of domains. We don't want to keep it open for everyone because that might cause issues if for like problem of like listings, or people might make bid that are not backed up by real intent. So that's why we like to to make a lot of screening in the beginning. But yeah, it's pretty active, and we just open up for true numbers and true letters. So
okay, very good. Congratulations. That's exciting. And
thank you.
will you be making the long trip to Austin?
No. It's 2 or 3 names that I'm missing. I like to go to Asia in that period normally. So
okay, all right. Well, we'll miss you there.
Yeah, it sounds fun because like this time it's Austin. So actually, it's I think it's a very I think it's a very good choice for location.
Yeah, it's a great town. Although Drew was complaining, the flights from Lisbon to Austin have a lot of connections.
Yep.
Can't quite fly direct like Vegas, but
I don't think there's a direct flight Lisbon to Vegas.
No, yeah, that's I was like, well, almost direct.
There's one now for San Francisco actually. I just put it. I mean,
from
Lisbon to San Francisco. Yeah.
Nice. All right.
Well, Drew needs his own jet. Why doesn't Drew has his own jet yet? I mean, come on, he flies around enough. He would probably save money if he had his own.
I don't think Anna would allow him to have a private jet. He and Anna are very committed to carbon footprint change. So, maybe he can develop like some cycling thing to fly him across the Atlantic, powered by domain investors, and he can talk the whole time and get give them advice or something. Maybe that's more like it than a private jet. I'll let you know those plans in Q3 2022. Okay.
It would look good. I mean, he could put his brand, media options on the bottom. I mean, it would look fantastic with a little flag. I mean, you could, anywhere he touches down, people will look up, his brokerage. I'm telling you, it's the way to go.
We've just barely talked him into having a different background, finally. He invested in the media options background behind him. And I've worked with him at Media Options for 7 years it took. So we're going to need a little longer to get to a branded private jet. A little bit longer. Yeah, I'll let you know.
Will do.
Thank you guys for coming on. And more than that, thank you for issuing this report and then making it personal here on the show and helping people to read through it. This is really fantastic. You are really fantastic. So
thank you.
Yeah.
Thanks.
See you next time.
Have a good one.
Ciao, Tess.
Yeah. Ciao.